Time to pick some stocks. We're going to let the new guy go first, Jared Levy, our new senior stock strategist. Jared, what do you got for us?
American Waterworks is the name of the company that I like. And, you know, I've sort of been trying to find an area where I feel most comfortable in this environment, right? It's sort of like we don't know if we're going higher or lower. The reason why American Waterworks is attractive to me is, number one, is water is sort of an essential element, right? It's not something we trade, right? Obviously, you can't buy and sell barrels of it where you probably should be, but interesting statistic. It takes us 3,000 liters of water, typically, the average human being to sort of function on a daily basis. That equals 151 billion gallons of water that we need per day. It's insane. I'm talking globally.
3,000 liters per person?
Per person. You think about showering, irrigation. This is breaking that. Well, it has to do with showering, irrigation, you know, the foods we eat, all this, a bunch of different things. Not to dig too deep there. The bottom line is, though, you think about emerging, you know, markets like China, like India, cultures that are wanting to not only consume more proteins but have a healthier sort of lifestyle, and that's really important, I believe, and what's going to drive demand for this company. Number one is here in the U.S. we have aging infrastructure. You know, many municipalities are old and need to be replaced. You look at cities like Philadelphia, Baltimore, New York. They're going to need the assistance of a company like American Waterworks.
So, but you're saying they're moving into emerging markets too?
They are.
Okay.
They are. You know, it's important to note right now that they are mainly focused here in the U.S.
How many metro areas?
30.
Okay.
Well, 30 states.
Okay.
15 million customers in 2 Canadian provinces. So they're pretty, you know, they have a wide reach here in the U.S. But again, it's all about sort of global demand. It's a cheap stock at 32 and a nice dividend yield of 3%.
I saw the chart. The chart looks great, by the way,
It's
too.
just bottom left, top right.
Tracy, what do you got?
I have Union Pacific. They just reported last week, and they're the largest freight operator in the U.S. So they're kind of a gauge about what's happening with the economy, and it was good. I mean, they blew it out, and you know, the analysts all loved it. And you can't fault it when you have 16% revenue growth. They saw volumes up about 3%. It was pretty much across the board, but they're still seeing strength in the autos. The petroleum products is really hot, and that's the shale play. And they're still seeing it in, you know, a little bit less in the ags, which was really hot there for a couple of years. So that's kind of pulling back. But these other areas are going to push them forward. And they said for 2012, they see it in lumber, which is interesting, and then the autos, and then the petroleum products again, because shale will still continue.
Yeah, lumber prices are down, but there is some bottoming in housing.
Yes.
That's right.
And you guys have all been hot on the rail stocks, or the rail stocks have been hot. You had Kansas City Southern a few weeks ago.
That's right.
I know Steve had a pick last week.
Yeah,
We have
whole
CSX
sector.
reporting after the close today.
And obviously coal is still a big part of the economy,
That's right.
so this is how you move coal too.
That's right.
Yeah.
All right, Shiraz, what do you got?
MarkWest Energy. It's a master limited partnership, mostly focused on natural gas transportation and fractionation assets. They also have some natural gas liquids, some crude oil, primarily an energy infrastructure play on this booming shale natural gas play. They're one of the dominant players in the Marcellus shale. And they recently bought their joint venture partner, spent close to $1.5 to $2 billion acquiring that group, which gives them a 100% stake now in all the assets that they're setting up there. Now, natural gas prices are low, but the long-term demand for the commodity itself and the need for the infrastructure is there. And this Marcellus shale would be a key component of the long-term supply for natural gas, and they are a very entrenched player in that. They pay about 5.5% yield. Very strong distribution growth prospects. Their coverage ratio is in the
and that's
vicinity
key.
of 1.4.
When you look at these guys, it is a long-term energy play.
That's right.
And also, if you're going to stick around for the quarterly distributions,
That's right.
you might as well stay in it.
Absolutely.
And have it in a investment vehicle where you're taxed favorably.
Exactly.
Because of their unique
That's
structure.
right.
So you
That's
have
right.
to talk to your tax advisor there. All right, mine is Cummins, CMI. Now, the industrial stocks, you know, took a hit in the fourth quarter, and rightly so, right? You know, where were we looking at global growth? China slowdown, Europe imploding. They're coming back. You got Caterpillar reporting this Wednesday. I'm really looking forward to Caterpillar's earnings. Caterpillar has run up $10 ahead into their earnings report here, so that's encouraging. Cummins is also breaking out above 105. They, you know, I call them the Caterpillar of diesel engines because they're making diesel engines for everybody, the premier ones, in and doing business in about 190 countries around the world. So we're sort of counting on China as the engine of growth, and we think that they're going to come through with stimulus and keep things going. And I think it's showing up in the industrial stocks here. So I think Cummins is one you want to own for a long time as the dominant player there. All right, that's the Roundtable Stock Picks for this week. We'll see you back here next week.